Hey traders, Clifford back with another video. So today I wanted to do something a little bit different, something I've never done, and actually talk to you about the psychology of trading the financial markets. And I also want to tell you a little bit about my history and my trading experience, my story. Basically, if you recently noticed, some of you may have noticed, I recently changed my handle name to the 25-year trader because I believe it resonates with me more. It kind of identifies me more. And that's because I've actually been trading these markets for 25 years. I'm about 49 years old now, and I started in my 20s. And like most traders, I just kind of jumped on the bandwagon, got involved with some futures or options or Forex back then. And, it was an exciting time because I was brand new to trading, didn't know much about it, but kind of jumped on the bandwagon, opened a Forex account. I think the most exciting day I made like $1,000 in one day and got excited and thought it was free money or something because I didn't understand really what it was. And then I eventually lost that $1,000 back to the market or whatever. So, but it kind of got me thinking, like, if you could really make $1,000 in a day like that, well, man, there must be something to this business. This is crazy. I've never seen anything like this in my life. And I kind of got bitten by the market bug, right? And and then over the years, I started buying books, whatever, and I started to read. Like we've all heard that saying that 90% of traders fail, right? 90% of traders fail. And why is that? Is it because the other 10% know something that, the other 90% doesn't know, or is it some other reason, right? And then, so that's why I thought of this video. I believe it has to do with the psychology of trading. And, you know, for people who, like, let's say some traders grow accounts, right? They take, a couple $1,000s to maybe $10,000 or $10,000 or $20,000 or some big number, right? But then you hear the story of like, oh, yeah, no, I lost it all. Something went wrong. What went wrong? Like, how does someone take an account from 2,000 to 10,000 and then lose 80%, $8,000? It has to do with the emotions of trading. Trading is not like an ordinary business. It's a lot of psychological things that happen in trading, and it's almost like every single day you open your charts, right? You have to like be able to prepare yourself mentally because this is, I'm telling you, it's like for those who are new to trading, you are going to be facing a psychological battleground every day in the market, and you're going to be dealing with these emotions. Now, the most common emotions that I had to face was I would say the three main emotions you're going to face are hope, fear, and greed. Those are the three that I find are like the most powerful emotions in trading. And if you let your emotions get the best of you, it could completely destroy your trading career, or if you're trading part-time and you one day want to go full-time or something. I'm not a full-time trader, by the way. I believe one of the reasons I'm not full-time is because I let my emotions get the best of me over the years, and it's hard. It's a psychological battleground. So, but now I'm at the point where I think I realize that, now my emotions, now I'm basically emotionless. It's more mechanical now because it's after so many years you realize that your emotions, if you let them get out of control, they'll destroy your trading career or whatever goals you're trying to achieve. So let's talk about it. So let's talk about hope, right? What are we hoping for? Okay, so new traders, they enter a trade, right? Like, what am I looking at here? This is, I don't know, oil, right? So I don't know, let's say I enter the trade here, right? And I already start hoping, right, that the market's going to go in my favor. Like, I hope this trade works out, right? Because if it works out, I'm going to buy here at $61, and I'm going to make, and I'm going to sell it at $67, right? And I'm going to make whatever that is, $4,000. Cool. I'm going to make $4,000, and maybe I'll put a stop loss, whatever, just in case I'm wrong. That's the first problem right there. You don't want to be thinking about how much money you're going to make. What you should be thinking about as a new trader, how much money can you afford to lose? Because you're hoping the market does this, you're hoping the market does that, but in reality, the market does whatever it wants. The market's not your friend, the market's not my friend, the market's not your enemy, it's not my enemy. It's just a force of nature, right? So hope will kind of get you in a state of kind of like thinking that the desired outcome is this when the trade hasn't even started yet, right? But you're entering here at 62, hoping that the market goes to 66. Okay, fine. That could be a profit target. It's okay to hope for things, but you don't want to like w- the way I would enter the trade now, after many years of understanding all this psychology, is that I'd be buying at 62, right? Okay, I can afford to risk, I don't know, whatever it is, $500, $1,000 on the trade. If so, that's like kind of like your trade plan, right? I can afford to risk $500, no more. And then, if, however, the market moves in my favor, obviously, then I'm going to take profits. But don't hope that you're going to make like $4,000 on the trade, because that you know what I mean. It's like a way of psychologically thinking that the trade's going to work out for you before you even pulled the trigger. Secondly, hope. Let's say the trade starts moving against you, right? And this is another problem. Hope right here. Like, let's say I bought here at 62, and then I had my stop, right? I had my stop, let's say at, this level, 60. But then, I heard on the news that, CNBC said that oil is about to get really high demand, this year, whatever you see on the news, or read on the news, and you're like, you know what, it's going to come back. It's going to come back. I hope it comes back. I hope the market comes back. And guess what? The market doesn't care about us, right? So what do? You psychologically might think that, oh, okay, well, they just said on the news that OPEC is about to cut production, whatever it is that you read on the news, right? And boom, you're at 60. You're like, you know what? Let me just move my stop a little bit lower, maybe to 58, just to give it a little more wiggle room, right? And then what happens? Boom, it goes down further. Now you're in the hole for like more than $1,000, almost $2,000 probably, or $3,000, right? And then now you're psychologically, emotionally getting crushed because you didn't follow the risk. You know what I mean? So, all right, that's enough about hope. So, I hope that makes sense for some of you who are new to trading. Let's talk about fear. Fear, right? Fear. Usually, fear revolves around losing. I'm afraid to take this loss. Okay. So again, let's use this example here. I buy in at 62, right? And you know that you should only probably risk 1 to 2%, right? But you're like, man, I just I read that on the news, the OPEC thing. You know what? Let's go with let's say I only had maybe $10,000, and you're like, okay, I'm going to risk 1 to 2%. Originally, you said you were going to do that, right? But psychologically, now that you know OPEC's going to cut production, you're thinking, or maybe a crude oil report just came out the other day and said that they have a decrease in the supply of inventories, right? Like a huge drawdown. So the market might rally like $20 they're predicting in the future. So what do? You you load up, right? Instead of doing 1 to 2% like you probably should, you got like $10,000 in your account. You're like, you know what? Let's take a 10% shot at this. That's the biggest mistake, because now you place the trade, and right, and like, let's say, whatever, you're going to sleep, whatever, you're not going to watch it. But all of a sudden, in the back of your head, you're like, man, $1,000. Oh man, I don't know if I can afford to lose $1,000. That's a lot of money to lose. Like, should I have made that trade? And then all of a sudden, boom, the market starts moving against you. You wake up in the morning, psychologically you're already crushed because now you're down 1,000 right before the market even opens, right? And now you're in that state of fear. Now you're in the state of fear, like, oh man, I shouldn't have done that. I shouldn't have done that, right? So now you're like, okay, what do I do now? Well, okay, you know what? I'm just going to take the loss because it looks like it's not coming back. Oh, maybe it'll come back. Hopefully it'll come back. No, then you're back into hope, right? You get stuck in the vicious cycle. Now, not every trader goes through this, but I went through it. So if you haven't been through it, I'm telling you, you might in the future. But if you're new, most traders have to go through it before they learn to discipline themselves of the market. So right, so now you're down $1,000. So then you lose that $1,000, right? And then then it hits the bottom here, like at 56, and you're like, okay, you know what? Now the last one, hope, fear. What's the third one? Greed, greed. Now we've all seen the movie Wall Street, right? Everyone's like, oh, well, Gordon Gekko said greed is good. Well, yeah, that was a movie, and maybe some forms of greed are good. I mean, I'm not saying that the American dream doesn't involve greed or the capitalistic society we live in, whatever, but greed is actually bad in my opinion because when you're a trader, if you get too greedy, it'll also psychologically screw you up completely and throw you in a tailspin. Here's what I mean. So now, right? Because you're new to trading, you're like you do something called revenge trading. You're like, okay, I'm down $1,000, but if I double my position right now, it only takes one small move for me to get back the thousand I lost plus get back into a profit, right? And OPEC said that they're cutting production any day now. So let's do it. Boom, you double down. You know you're supposed to risk 2%. You went from 10,000 to 9,000, probably 8,000. And now you're like, okay, you know what? You know what I mean? You get psychologically in a tailspin and then you get greedy. You want to make it all back in one trade. And believe me, I've been there. I've done revenge trading. It doesn't work. It might work once or twice, but eventually you'll get crushed. I promise you. In the long run, revenge trading does not work, and also it's horrible risk management. So just don't take it from me, someone who's been doing this, someone who's been through the trenches. I mean, take you don't have to take my advice. I'm just a whatever, a voice on YouTube, I guess. But all I'm saying is that, sorry, a voice on TradingView. But all I'm saying is that greed will destroy your account. Greed will make you over leverage your account. Greed will make you instead of reduce position size, it'll make you increase position sizing, right? And I'm telling you, it'll destroy your account. Oh, one last thing about greed. Let's say you do enter a trade and it starts moving your favor. Like, I don't know, maybe right here you entered, you got it right. You got the bottom right. You bought at the bottom. You did great. I mean, you're a genius on your entry, right? But then what happens? The market moves higher, right? You know you're supposed to take profits, but because you were watching that inventory report or OPEC or whatever you were watching, all of a sudden now you're like, well, they said the market's going up to to whatever 10 higher and higher, and then all of a sudden you have a profit, but you don't take the profit because you think the market's going to go higher, or you got greedy and you want to make a bigger profit. And then all of a sudden, what happens? The market reverse probably knocks you back to break even. Okay. So, and, or even if, in examples like this, you bought in here, you didn't take a profit. You could have taken a profit, but you didn't. Now you're back to break even. Or again, even worse, now you let what's the rule that everyone says, never turn a winner into a loss, right? You bought there, it rallied, you never took the profit, now it's at a losing position. So again, fear, hope, and greed. My solutions to these after 25 years of trading are this, and hopefully this helps some of you who might be new to trading. Hope. I don't hope anymore because I realize that the market is always going to be, an unpredictable force of nature, right? You know that you're probably going to get the direction right about 50% of the time. So there's no need to hope that this trade works out. All you got to do is use your risk management. There's a reason that experts say risk 1 to 2% on your account. They don't say that just to sell books. They say that because as your account grows and you deal with larger and larger amounts of capital, these losses can be detrimental. They could really put a dent in your performance, and everything. So for me, hope again, I don't look at the trade as how much money I'm going to make. First, I look at the trade as how much can I afford to lose. That way, I don't have to hope that it's going to move in my favor or anything like that. For fear, same thing. Back to risk management. 1 to 2% risk. Don't don't bet the farm, because then you can lose the farm, right? We've all heard stories about people, sadly, who made larger and larger amounts of capital. Some of them made millions, and sadly, when they lost it all due to over leveraging or taking risk, some of them, the stories were really bad. Um, so just, use your risk management. 1 to 2%. Stick with that rule, and I promise you, you will get those profits bigger. Or you could also do, maybe one of the strategies you could do, if you really want to make larger profits, is try pyramiding. I'll make a video about that in the future, but yeah. So hope, fear, make sure that whatever trade you put on, make sure you could sleep at night. You know what I mean? If when you go to sleep, you're like, oh man, that's like I'm risking $1,000, $2,000. That's way too much. My account is only this much. Then just risk less. You know what I mean? Do the 1 to 2%. Be disciplined and do it, because I promise you will one day thank me when you have exponential growth and things like that. And then finally, greed. For me, greed is about taking to not be greedy. I mean, obviously, we all want the profit, right? Okay, fine, but maybe, set a profit target. And for example, what I would do is, if I'm going to try and make a larger return, maybe I'll enter, instead of one, micro contract, I'll enter like three of them, right? And then as soon as one hits my profit target, close like maybe half the position, close 75% of the position, move your stop to break even, and let the other one be the one that might make you more money. That way, you don't have to worry about not taking profits and then seeing the profits completely reverse on you back to break even, wasting your time. And believe me, I've been there. So that's what I would recommend for those three things: hope, fear, and greed. And again, if you haven't been through these, trust me, one day you're going to experience them. And the larger amounts of money you trade, the more the emotions will hit you psychologically. So just, remember that part. Um, and then the last thing is, it's not all bad news. Okay, I mean, there is good news too. The good news is, once you go through these psychological landmines, right, and then you finally learn from them, and some people have to hit the bottom before they learn. Like, some people have to lose their account, blow their account, grow the account, destroy their account. Prop firms blow up the prop firm, blow the account, destroy the account, grow the account. Some people have to go through that vicious cycle before they finally learn. But when you learn, the good news is that you will finally have that discipline, and you won't think twice about it. You'll look at the market and say, you know what? Okay, I'm placing this trade right now. I got my risk stop. I'm going to sleep. My plan, you already have the plan set up in advance. I know to take profits here. I know to move my stop here. I know to move the rest to break even, close half the position. It's like your mind is like playing a chess game, and you are now in control. So the good news is, once you go through that vicious cycle, the good news is that you will come out ahead as a winning trader. And I truly believe that these markets can help us generate wealth over time, but we have to be disciplined, and we have to have our emotions in check. So that's about it. Was a longer video than I usually make, but just wanted to kind of cover that. And once again, my new screen name is the 25-year trader. Um, kind of represents my history of trading the market there. And also check me out on YouTube. I'm going to make some good videos about psychology on that too in the future. The psychology of trading, it is the psychology of trading. I'm telling you, it's so important. Don't just like throw it under the rug. Don't think it's like one of those things that, oh, I could handle that. I'm telling you, read about psychology of trading. You'll see how serious this stuff gets. So